Now shifting our focus to the stock market, where benchmark indices Nifty and Sensex traded higher following a choppy morning and opening, showing high volatility. IT stocks weighed on sentiment, with the sectoral index sliding nearly 6% after a major tech rout in the United States. Investors also booked profits a day after the strong rally on Dalal Street triggered by the India-US trade deal, while escalating geopolitical tensions between the US and Iran added to the caution. Analysts see the positive momentum extending in the near term, with gains likely to be driven by stock and sector-specific moves supported by recent trade deals with the US and EU, union budget measures and the ongoing Q3 earnings season. Let me in fact go across to Mr. Akash Jindal, senior economist, for more on this. Mr. Jindal, how are you seeing this sudden drop in the tech IT stock shares and also on Sensex and Nifty?
The Sensex and Nifty both rose tremendously yesterday, and the reason is clear-cut because of this Indo-US trade deal. This is a huge deal, and this is going to benefit our economy immensely. This is going to grow our GDP. This is going to grow our forex reserve. This is going to grow employment. This is going to be beneficial to companies. And overall, it's going to be highly beneficial for Indian economy, Indian corporate sector. Because see, US has been our biggest trade partner. Now, more exports to US means much more business to us, much more forex to us. This will also help the dollar, which has been becoming very strong against the rupee. Dollar had gone beyond 92 rupees. Now we need dollar to be lesser than that, because higher dollar means higher inflation for us, because 75 to 80% crude oil is imported. So I think it's very matured and very nice on our government to have struck this deal. And now our tariffs, which have been imposed by US now, the 18% tariffs are much lesser than other comparable countries. So now our exports to US are going to increase. Plus there's another thing. When the tariffs were imposed, now FPIs also post that, they started sort of withdrawing from India, because FPIs also, foreign portfolio investors, primarily they are US based. So once they sensed that the business with US is going to be lesser, they also started withdrawing from Indian markets. Now I expect FPIs also to invest more into Indian market, because Indian economy is anyway the fastest growing amongst major economies. So since Indian economy is going great guns, I expect a lot of FPI money also and FDI also to come to India. So I think this is a huge deal, and I think it's a huge achievement of the Indian government. Firstly, to crack a deal with the EU, then within few days to do a deal with the US. And I think US, they saw the EU trade deal, then they monitored our budget also. Our budget also has been a great exercise, which is showing that we'll be investing into semiconductors, biopharma and infra, which is going to add to Indian economy. The US also clearly knows that India is on the path of becoming a huge economy, an economic superpower. And US also understands, because they have suffered because of the tariffs. Because of the tariffs, US inflation has increased. Because of the tariffs, US unemployment has increased. So US has also taken a prudent decision by doing this deal. So that's why, as an economist would say, Sensex and Nifty have shown great confidence in the Indo-US business. And why not? Because US has been our biggest trading partner once upon a time. So this is what is reflection of the Indo-US trade deal. And of course, also
right,
I would say...
Sir, I apologize for interrupting you. Please do stay on with us. We have another piece of